Audit reporting is without doubt the topic that students hate the most for advanced auditing exams. It's full of technical dry language. People really struggle to put it into context and to understand what it's really about. And the exam questions are horrible. The idea of this session, and what I really hope you get out of it by the end, is that it takes a lot of the complicated ideas, a lot of the complicated language that you see in an audit report, and makes it a bit more simple for you so that you have a good grounding, a good understanding around what really goes into audit reports. I'm joined by Pamela, who's playing the role of a student for this session and is going to ask me questions. And I asked Pamela, as part of the prep for this, to read ACCA's latest audit report. So, Pamela, how did you find reading that report?
It was awful. I found it incredibly dry. A lot of the language just went on. I found sentence structure was so long. You lost the train of thought from the beginning to the end. So I had to reread things several times to try and get the kind of basic understanding of it. It was really horrible.
And it's weird when you read one. It's almost like it's written in a way that they don't want you to read it. They're so inaccessible, such long, complicated sentences and words.
Yeah.
And you just get, it's full of so much standard language as well that you're like, what do I actually know about this audit? What do I know about what went on in ACCA's financial statements last year? From reading that audit report, you just get lost in all of the meh.
I found there was a couple of bits as well where it seemed quite vague. It would say something like, we got to understand how the company works. And then the next point would be like, we got to understand how the company works. And you're like, but you don't tell us how you did that, or,
or what it did.
Or what it did, exactly.
Yeah, totally. So they're not very accessible. And that is true. That is a criticism of audit reporting generally. But we do have to deal with it in the exam. And you are going to be asked exam questions on it. So you do need to understand stuff about what goes into an audit report. So hit me with some questions, Pamela.
Okay, so the first thing obviously was the audit opinions. I presume that's a standard thing, that's in everything, and you're basically saying yes or no.
Absolutely. And it comes right at the start of the audit report because it is the most important thing. It's the auditor's opinion where they're saying, we've done all our work and we say, yes, in our opinion, the financial statements are true and fair, free from material misstatement, and have been properly prepared. It kind of says those three things. And those three things are... let's break it down into different bits. It's our opinion. It's not fact, but we're the auditor. We're a third party. We are independent of the company and we think it looks all right. We're an expert. We think it looks all right. We don't know for sure, but we think the numbers look okay. True and fair is standard terminology that you will see in the audit report because some of the numbers in there in the financial statements aren't factual. There is some judgment. So that's where the word fair comes in. And free from material misstatement means there's no big issues. That's what material means. There might be a little teeny tiny error in there somewhere, but it's small enough that nobody cares about it. So that's what their kind of standard, it's all okay audit opinion says. And actually, I'm going to put you on the spot here, Pamela. Is that what the ACCA audit report said, that opinion?
Basically, yeah. Yeah.
And it did.
Yeah.
And 99% of audit reports will sound like that. The auditor says everything's okay. Because if they found anything that was wrong, they would go to the company and say, this number's wrong. This is wrong. You need to change it. And management would say, yes, we'll change it. And then they'll amend the number. And then the auditor would say, everything's okay now because they changed the number.
So they will give you the opportunity to amend it before they release the report.
Absolutely. So that's the
okay.
real world. In the exam world, management will say, no, we are not making that change. And therefore you'll get all of these different audit opinions in the exam world. You get ones where management disagree with you over some financial reporting, some accounting. It might be a little disagreement. So you might say in your audit report, everything's okay, apart from this one thing where we had a disagreement. Or it could be a huge disagreement where we disagree about everything in the financial statements. And then you go, we disagree. Everything is wrong in these financial statements. That would be an adverse audit opinion. So you might get a qualified one, except for, where you say everything's okay apart from this little bit, or one where you say everything's terrible. We disagree on everything, and that is an adverse audit report. The other types you might get are where management don't give you everything you need to do the audit. So you go in to do your audit work and they don't give you all of the information you require. It could be a small bit or a big bit. So go on.
Are they legally allowed to do that?
No, so they have a duty to give you everything you need for the audit.
Yeah.
A legal duty. It's a statutory duty as a director. But that doesn't mean, just because they're supposed to, it doesn't mean they do. They might be trying to hide something. Could be something dodgy. So if it's a little bit of information, you say, we did our audit, everything was fine, apart from I can't get comfortable over this area because I didn't have the piece of information I needed. So that's that qualified except for opinion again.
Okay.
Or you might get the one where they don't give you any of the information you need and you say, I can't actually give an opinion. I give a disclaimer opinion because we couldn't really do the audit because there was so little information. It could be that they're dodgy and not giving it to you, or it might be that, there was a virus that corrupted their whole system, or in the exam world, there might be a fire or something that destroys everything.
Okay.
So you'll always see that. You'll always have that audit opinion right at the start. And it's at the start because it's the most important thing. Everything's okay or not.
Okay. So then the next thing, it seemed to go into why it's okay. There was, standard.
Absolutely. So it's called the basis paragraph, basis of opinion paragraph. And you give a bit of detail there as to how the auditor has got comfortable. We've done our audit in using these audit regulations, this sort of stuff, following these ethical standards. And this is a little bit of support to say how we are comfortable giving this audit opinion. It's standard language in that paragraph, and it's really dry and inaccessible. It's very hard to understand. You end up reading it 4 times to get what's in it. It's really dry. Yeah.
Are there then non-standard things that you might come across?
There are. So all companies will have an audit opinion and a basis of opinion in the audit report. Those two things always happen. Now, if it's a big listed company, or any listed company, a public interest entity, so a company that there is more people who care about the numbers, there's more public interest in the numbers being right, and more people who are going to make decisions based on those accounts. So buying and selling shares or whatever, because it's a listed company. Now, the auditor in that situation will give a bit more information as to how they did the audit. And it's called a key audit matters section, or a KAM section. And in here, the auditor says, these are areas that we thought were really high risk about this audit. These are the things that have changed about the company, or are really judgmental, or somewhere where we thought a number might be wrong. So these are the bits that we thought were risky about this company or the audit. This is the audit work that we did on those areas. And this is the results of that audit work, basically saying everything's okay or not, as the case may be. Now, that is an extra section that you only get in public interest entity audit reports. And ACCA, although it's not a listed company, it does have that key audit matters section because it has wider public significance than a normal small business, if you like. So the auditor of ACCA has put that extra information into the audit report so that the user can understand a bit more about how the audit worked. Now, Pamela, I'm going to put you on the spot again. You read that one.
I did.
Do you now have a really good understanding of how the ACCA audit worked?
No. I mean, I read it a few times, and so at the end I was like, I think I know what's going on, but I'm not sure I would feel comfortable actually going into court and trying to say why it was that way.
Yeah, totally with you. But the kind of person who would be reading it, and I'm not being, it is like an investor. So or someone who is advising other people on investment decisions on buying and selling shares. So someone who's more in that world, maybe it would mean something. But again, it's loads of standard language, and it also, as like a sort of normal person like us, just reading the audit report, you just get a bit lost in all the detail. It's almost like there's too much in it for it to be usable. Anyway, so that is, you only get that key audit matter section in a listed company or a public interest entity audit report. But there are other unusual ones that you don't really see in the real world, but you do see in the exam world, because the examiner is trying to, I guess, write exam questions that test your sort of wider knowledge and understanding. So I'll go through a couple of those. The first one is called an EOM, or an emphasis of matter paragraph. And this is the auditor like basically setting off a siren, a big red flag to go, you must go and read this area of the financial statements. There is something enormous that's happened to this business. Management have dealt with it correctly. It's all been correctly disclosed, correctly accounted for. There's no error here, but you cannot understand what's gone on at this business if you don't go and read this emphasis of matter or EOM area that we're highlighting to you. Go and read note 7. It's a really good one. So you get that very rarely in the real world, but in the exam world, you get that happening a lot. An example of when it actually happens in the real world, BP, the big oil company, they had the Gulf of Mexico spill back in, actually, I can't remember what it was. Long enough ago now that actually 90s? It's ancient history.
Yeah.
Late 90s and the 2000s. So. Anyway,
yeah.
Whatever it was. Probably should have researched that a little bit first. But they had this huge issue that happened. The business was still fine, and they'd accounted for it correctly, but a user of the financial statements could not understand what was going on at BP if they didn't read all about the Gulf of Mexico spill.
Right.
Yeah, but the fact that I'm having to go back to something that happened that long ago tells you how rarely you see one of these in the real world.
Okay.
So that's emphasis of matter. And then the other one I was going to talk about was a material uncertainty over going concern, MURGC paragraph. And that is, it's awful, isn't it? So this is again, it's a bit like emphasis of matter in that everything's been done correctly. So there's no error, but we just don't know if the company is going to carry on. There's a big court case happening, and if we lose this court case, we're going bust. But we don't know if we're going to win the court case or not. And if we lose it, the company's going under. If we win it, we will be absolutely fine. And so in that case, management don't know if the business is going to carry on, and neither does the auditor.
Right.
So the appropriate thing to do there is to tell a user of the financial statements all about it. So you have a note in the financial statements that says, we've got this big court case. Here's the details of it. Here's the latest information as we have it. And it's going to be decided probably in 3 months' time. And then we'll know if we're going to go bust or not. So you're open and honest with a user of the accounts about it. That's what management have to do. And then the auditor will have this material uncertainty over going concern paragraph in the audit report to say, warning, 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 go and look at note 3, because if you don't read it, you won't realise that this company might be going under.
Right.
This is incredibly dry and dull stuff. And it just is, but you do get loads of exam questions on it. So you do need to know this stuff. You might have to, in the exam, you might be given an audit report and have to say how it's been poorly put together, critically evaluate it. Or you might be given some scenario information and asked, what would the audit opinion be in this circumstance? Those are the two most likely exam questions you might get.
And then just for my own knowledge, you said both of these things, everything has been done right and they're just for people to be aware of. If something hasn't been done correctly, is there a process?
Yeah, that's a great question. So if something hasn't been done properly and management haven't disclosed about the legal case, let's say it's really commercially sensitive. They don't want to tell the world that, that one of their directors is involved with the Jeffrey Epstein case or something. Maybe a bit, whatever. Something that they don't want to tell everyone. And so they don't put it in the financial statements, and the auditor disagrees with them. They need to put this in there, but they refuse. In that case, it's the audit opinion that gets modified.
Right.
So you then say the accounts aren't true and fair. They're not free from material misstatement, because they needed to have included this note about the Jeffrey Epstein case that they've all been tied up in. That would be in the audit opinion and the basis paragraph. Right. That was a great question, Pablo.
Thank you. Surprise. Is there anything else pertinent that you think might come up in exams that people need to know that maybe they wouldn't automatically think of?
Yeah. In this area, having a really standard approach is very, very valuable. Having a process that you follow for an audit reporting question. So that no matter how weird the scenario is, you're picking up the marks. So on my course, we go through a really solid approach that will get you marks every time in one of these questions. But the sort of thing you want to be doing is you're always discussing whether the issue is material and pervasive. So is it a big deal? Is it a huge deal? You always want to talk about what type of issue it is. Is it a disagreement with management, or is it a lack of information where we haven't been given everything that we need? And you always want to conclude really clearly about what the audit opinion is. And if it asks you about the audit report, you've got to think about those extra paragraphs too.
Okay.
But yeah, that standard approach really, really helps. So I hope everyone's found this useful to listen to. If you've carried on until this point, 16 minutes of listening to audit reporting, heroic.
Well
You
done.
have my thanks. Cool.
Kat?